Let's get started with all the stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. And on the technicals, we are joined by Sumeet Mulchhandani today. While from the research team, we have Harsh as well as Ashisha joining us. So very good afternoon to all three of y'all. And as always, I'm going to be starting with the first stock that is in focus, and that is Titagarh that is in focus. We have HSBC that has actually initiated a coverage on this one. They've given a buy rating and given a target price of 730 rupees per share. What they're saying is now that India is planning to put on fret on rails provided by a compelling opportunity for Titagarh order prospects, and from the metro segment are also bright, given that the large pipeline of metro orders are under construction as well. For more than half of the under construction metro projects, rolling stock orders are yet to be awarded, and they expect Titagarh to deliver a revenue CAGR of nearly 30% over the next 3 years, while expect EPS to more than double over the next 3 years as well, with high teens ROE. And even after a recent rally, believe the current 26x FY25 valuation under appreciates the solid growth outlook that they do have coming in for the company as well. So let's keep an eye out on Titagarh Rail today on the back of this news flow, seeing gains of almost 7% as of now, Shrishti.
Okay, moving on to the next counter then. From the IT space, Zen Technologies is seeing no stopping there. Today itself, the stock has hit its 52-week high levels. For now, it's trading flat, but the news flow is that the Mukul Agrawal has bought additional stake in the June quarter, wherein he has bought and purchased 1.34% stake in Zen Technologies during the June quarter, as per the data by NSE, wherein the large investor Mukul Agrawal has purchased, and that's the news flow coming in on Zen Technologies, seeing no stopping with the IT stocks rallying, and that's the news flow on this one.
Okay, let's keep an eye out on Zen Technologies. We saw that spike up as well, but then it's come and given up those gains that in the morning we saw. Let's move on and talk about the first stock on the charts and technicals. And Sumit, you picked out D-Link for us. Now, that's not a stock that we've seen a lot of technical analysts pick up. So, in terms of the charts, looking at a 40% return in the last 6 months, D-Link still an attractive buy, or maybe time to book some profits now?
Hi, good afternoon. No, we should advise to ride the momentum. If you will see, in the month of November, it has made a high of around 311, and today it has made a high of 310. So we are just waiting for the weekly closing about this level. So just if anybody is holding, can hold with the stop loss of 265, and if you want to make a new position also, can make a hair. And we are expecting around 25% upside. It is around 400 will be our target. So it is a good on the technical. Cup and handle breakout is also there. Symmetrical triangle also breakout. So just accumulate the stock till the levels of 265 for the target of 400.
Okay, moving on to the next counter, and let's go across to our research team. From that, Ashisha, tell us about your first stock you have picked up, L&T Finance. What is the news flow and why the buzz today?
Well, yes, the counter will be reporting its numbers later today. The stock, in fact, is all charged up, nearly 2.5% higher in trade as we speak. Net profit is expected to double on a year-on-year basis. Net interest income is also expected to see an uptick of nearly 19% on a year-on-year basis. Strong disbursements are expected on the retail side, but wholesale book rundown is expected to continue for yet another quarter. As far as net interest margins are concerned, Street expects substantial improvement in the net interest margins as well. All in all, solid set of numbers are expected, profits expected to double, and ahead of its results, the stock is excited in trade today.
Okay, let's move on and talk about Mahindra Holidays then. And Sumit, Mahindra Holidays, when you look at the move in the last 1 year, surely has seen a very good move. Last 6 months also, 40% return. What are you expecting now from here on the charts?
In just 2 weeks also, if you will see, it has given a good return from 300 levels to 360. But when we are drawing the chart on the monthly basis, it has given us a highest closing ever, plus a cup and handle in the monthly time frame. So still we are expecting more upside. But but on the current market price, we would just advise to hold and wait for some dips till the levels of 320. So for the next 12 months, we are expecting 440 and 520. These are the two levels we are expecting. If already anybody is holding, just keep a stop loss of 295 here.
Okay, moving on, and Harsh, coming to you, you have picked up L&T Tech. Why this counter is buzzing? Tell us more about that.
Well, yes, results, Srishti, and while the results were a bit of a dampener, if I can call it, but the guidance has come in quite strong with regard to Q2 and second half of this financial year. But let's quickly take a look at the numbers. What we've seen is revenue has come in at around 2,300 crore, which is a slight bit miss versus the 2,400 crore expected. EBIT margins have come to around 17.2% or thereabouts, and the estimates were sub 17%. So the estimates weren't great to start off, but it's not so bad with regard to margins, and PAT came in largely flat on a quarter-on-quarter basis. The commentary though remains extremely strong, quarter two as well as second half, and that's what's probably keeping the stock buzzing as well, 3% higher in trade. So 20% plus growth guidance is maintained in a tough environment. The company is expecting a 10% organic growth, and they are on track to achieve the $1.5 billion US dollar run rate by FY25. The targeting margins of around 17% in FY24, and aspiration is to go to 18% in the next 2 years. Second half is going to be stronger than the first, and high tech and health they're slightly cautious on, while transport is expected to bounce back. Deal ramp-ups are visible already. So quite a few positives playing out with regard to forward-looking commentary from L&T Tech.
Okay, surely keeping an eye out on that. But let's put the spotlight on Godrej Industries. And Sumit, in the last 1 month, we've seen a bit of a decline coming in for Godrej Industries. Before that, there was a sharp run-up also that we've seen. So do you think now that we would see a correction coming in Godrej Industries, or maybe it's just the right time to pick up again with this slight bit of a blip that has come here?
470 to 475, this is a make or break level. Today the stock is giving the close below the 50 moving average, so that is a negative point. And if you will draw a trend line from the April, so it has broken today and giving us the close also. So if any time we are getting the close below the levels of 475, then more downside will be possible. So keep a stop loss to your equity holding. So if any delivery player is there, if 475 broke and closing, so just exit for a while. We are expecting 455 and 440 levels to come down.
Okay, let's move on and talk about BL Kashyap. Now, this one is in focus today on the back of an order win. And this order win, they've received an order worth around 369 crores, and that is from DLF Home Developers Limited. Now, the company's total order book stands at around 3,086 crores as well. This is excluding the GST as well. Now, BL Kashyap said in its filing. Now, the order that is there is for civil construction, waterproofing works for DLF, the Arbor, which is in sector 63 of Gurgaon, and it includes free supply of steel is what also it's highlighted. So let's keep an eye out on BL Kashyap. Today trading with gains of almost 1.6% as of now.
Okay, so new order win for BL Kashyap, but moving on, let's shift focus to ICICI Prudential Life Insurance. That has fallen as much as 4.7% to 559 rupees is what we are seeing. The stock is seen to be recovering a bit as of now, but the company has reported a 33% increase on a YY basis in the Q1 profits this time around. So on the back of the results, the stock did blip somewhat to more than 4% in trade today, but is seen to be recovering with the markets. But when we could talk about some of the other numbers from the earnings, then look at the move of VNB, where the value of the new business has declined 7% on a YY basis due to a 4% YY fall in the annualized premium equivalent, that is APE. Then Macquarie says shift in the demand to the March ahead of the introduction of the new tax rules resulted in subdued EPE growth during the first half of Q1 as per the company's management, while Motilal Oswal says that the rebound of the premium growth rates in May and June indicates limited impact of the tax changes, whether they retain their buy rating with a target price of 670 odd rupees. So that's the take coming in from the brokerages. That was ICICI Pru on the back of results. The stock is in focus.
Absolutely. On the back of results, we're seeing that the stock is in focus and seeing a bit of a correction as well. And the new tax rules that have come in since the budget is a factor that is coming into play for all these companies as well. Sumit, you have picked out ICICI Prudential on the charts as well. last 6 months, when you look at it, not a bad return in terms of last 6 months specifically. Actually, it's just last since May that we're seeing a bit of a recovery. But today we are seeing again, because of the earnings, we're seeing a downfall. What is the view in terms of the charts for ICICI Pru?
There are the two views. One is on the lower time frame. That means on the daily chart, if we see, it has got a rejection. This is the fourth time we have got the rejection from the 600 and 610 level. So previously it was the support and now it is acting as a resistance. So on the weekly time frame, anytime if we are getting the closing above the 600, then new rally might be there, and it can go further till the previous high of 720 and above. But one can utilize here. Previous swing will act as a support here and as a stop loss also. So closing below the 555, we are expecting little downside till the 520 level. But if somebody has a longer time view, then one can utilize these dips on the and keep the stop loss of 490 for that.
Okay, moving on to the next counter, then let's talk about the stock which is seeing no stopping. And Ashesha, coming to you because that's Polycab. Tell us what's yet again an exciting factor for Polycab and why this counter is still up today.
Well, yes, Polycab in fact reported its numbers in the last hour of trade yesterday. Solid set of numbers, revenues up 42%. Profit after tax also saw a solid uptick of nearly 81% on a year-on-year basis. We in fact have a couple of brokerage notes that have come in on Polycab on the back of strong set of results. Jefferies in fact came out with a note where they are maintaining their buy stance on the stock, but they've hiked their target price to 4,835 from the earlier target of 4,270. Jefferies says that consistent and strong execution is driven by better volumes and margins in the cables and wires business. They also view Polycab as a strong play on Indian capex and the housing theme. And basis the first quarter results that the company declared yesterday, they've gone ahead and raised their FY24 to 26 EPS estimates by about 6 to 7%. So on account of strong set of results, Jefferies has gone ahead and hiked their target price, on account of which the stock is gaining in trade today. It has maintained those gains and sitting with gains of nearly 3.5% as we speak.
Okay, surely keeping an eye out on that, but we also spoke to the management, and what interesting commentary they gave in also. They've given a previous guidance in terms of the margins, where they said that they would reach 11 to 13% would be the range till FY26, but they said that seems like, they could up that guidance as well and they could perform better. So 12 to 14% is what they would be targeting in terms of the new EBITDA margin guidance. FMEG business also, they're expecting the margins to come in at around 10% and a growth of around 20 to 25% in the next 4 to 5 years is what we could see coming in for the FMEG business as well, which had been a bit of a lag for the company. So they're looking to expand over their international business. Also, they're quite positive on increasing their channel and network over there as well in the international business. So positive commentary all in all is also coming from the management, which is keeping the stock abuzz as well.
Okay, so that's the management, what they are saying on Polycab. But moving on, let's shift focus to MTAR Technologies because that's the 10th stock that we want to be highlighting for you. And for that, Sumit, coming to you because in the past 6 months, the stock is already up 27%. What sort of and more upside you are looking out for this counter?
Just 2 months prior, we have discussed the same stock at the level of around 1950 and we have shared the level 2170. Today the stock has done the target, but if we would just suggest to hold the stock with the stop loss of 2040. On the weekly time frame, it has given a new breakout. So we are expecting the level of 2300 ahead. So keep a stop loss of 2040 here.
Okay, let's keep an eye on those levels for MTAR Tech. But Harsh, IndusInd Bank, take it away. What are the numbers looking like? What are the brokerages saying?
So, IndusInd Bank came out with a solid set, largely in line. In fact, you're seeing margins, expand by just 1 basis point, but expand nonetheless in a quarter where, it's been difficult for most banks to make sure that margins go up in any meaningful fashion. So that's one piece. When I'm also looking at what largely brokerages have done, they've actually upped their target prices. You're seeing the likes of a Morgan Stanley, you're seeing the likes of a BofA, all of them, increasing their target price on IndusInd Bank. And essentially what they are suggesting is that, there are several levers for IndusInd Bank. One is the credit cost is largely a beat, so that's a positive. They're also looking at deposit rates starting to peak in the second quarter, which will mean that actually it will be margins will actually start going up thereafter for IndusInd Bank, which is also a plus. In fact, Goldman Sachs has hiked its target price from 1586 to 1681. We're also seeing Morgan Stanley hike from 1725 to 1800, and we're seeing JP Morgan hike from 1060 to 1250. So very solid hikes seen across the board. Lastly, one important piece that JP Morgan also suggested is that the founders are going to shore up stake in the bank, which will be a key positive in the near term and will act as a catalyst for the stock, and hence largely IndusInd Bank in focus for all of these reasons.
Well, yes, holding gains since morning, but moving on, and one such stock that has seen a stellar recovery since the March lows is Bajaj Consumer. Sumit, that's the counter that you have picked up and now sitting at its 52-week high levels. Tell us what sort of a new targets that you have for Bajaj Consumers now.
Yes, it is after the Jan 22. It has given the consolidation breakout in the last month. So in today's current week, it is showing the new higher high. So we are expecting around 40 to 50% up move from here. So the levels we are expecting is nearby the 300. So one can keep a stop loss of 170. And if any time the stock is giving the weekly closing above the 310, so that will be the near the high of the previous swing, which was created in April 2021. So more upside can be seen, but here one can ride the momentum till the 300 levels.
Okay, keep an eye out on those levels for Bajaj Consumers. But that was a 13th number stock, and that was the stock that we are going to take a break on. So don't go anywhere. We'll be back with more stocks after this break.